Hey everyone, thanks for joining us today for our Corporate Venture Capital Webinar Briefing. We're going to give everyone just another minute or two to join and then we'll get started. In the meantime, enjoy the CB Insights theme song. Thanks.
CB Insights will help you to find the next unicorn. Will help you to see where the smart money is investing. CBinsights.com will help you to discover the next hot industry. CB Insights.
Okay everyone, thanks for waiting. My name is Riley and I'll be walking you through a few housekeeping items before turning it over to Ben for the presentation. First, don't worry about taking notes as we'll be sending both the slides and the recording to you right after the webinar. Second, if you have any technical difficulties during the webinar, your best bet is to reach out to the Citrix Help Desk. You can also tweet at us or send an email to webinar@cbinsights.com and we'll do our best to help. But again, we'll send everything out afterwards, so don't worry too much. Okay, so as with all of our webinars, we'll be moving through a lot of data and insights and doing it pretty quickly. But we also want to make sure that we're answering your questions and keeping this relevant. So throughout the webinar, feel free to ask us questions using the questions tab within GoToWebinar or via Twitter using the hashtag CorpVCData. And of course, we're CB Insights. Finally, our webinars are different than most because they're rooted in data, not punditry. I doubt that's a surprise given that CB Insights is a data and analytics company. We track every private company in the world and all the investments and financing activity related to them to help our clients answer questions about major trends, competitor strategy, potential disruptors, and much more. If you're tasked with answering those type of questions and are interested in seeing the platform from which Ben pulled today's data, just let us know and we'll set up a quick call. Okay, with that, let's introduce Ben and get started on the content. Ben is a research industry analyst here at CB Insights and is focused on fintech, real estate, and more. His research has been published in dozens of publications, including the New York Times, the Financial Times, Bloomberg, and others that you can see listed there. He is a graduate from the University of Michigan and previously worked at Resonant Ventures Partners. All right, Ben, take it away.
Hi, everyone. Thank you, Riley, and thank you, everyone, for joining. Just to outline the agenda and what we're going to cover today in the webinar, first we'll take a look at global corporate venture capital trends, highlighting the global slowdown in deal and funding activity. Then we'll take a look at how corporate venture capital measures up within the greater VC ecosystem. From there, we'll take a look at some geographical trends, and then next we'll benchmark CVCs by different verticals and focus areas, comparing their activity over the last couple years. Finally, we'll end with sector trends, diving into certain verticals CVCs are investing in. So there's been some debate within the tech ecosystem regarding the impact CVCs really have on startups. Fred Wilson of Union Square Ventures expressed his opinion in June at the CB Insights Future of FinTech conference. As you can see, he doesn't think too highly of CVC investors, and perhaps his most notable comment at the conference was that entrepreneurs doing deals with CVCs are actually doing deals with the devil. If you have a moment, I highly recommend watching the full video. I've attached the link at the bottom. Here we have another point of view from Andrew Cleland, Managing Director at Comcast Ventures. We actually feature Andrew's point of view in more detail as a guest post on the CB Insights research blog. I've copied the link at the bottom of the page as well. Given this conversation within tech, it's interesting to note that the growth in corporate venture is unprecedented. In the first half of 2016, we saw a record in the number of new CVCs making investments in startups. For example, General Mills Ventures and JetBlue Technology Ventures made their first investments in the first half of 2016. The CVC community includes tech and healthcare CVCs, but has grown way beyond that. Telecom, financial services, CPG, airlines, and industrial companies are all building out their CVC arms. We'll be digging into this data in more detail later on. So let's get started. Let's start by taking a look at some global trends. As we can see, global deals and funding have dropped significantly in Q2 16. Looking at the historical trend, we see the record-setting quarter in last year's Q3, where CVCs were involved in unicorn deals like DD Kuwaiti and SoFi, among others. Since then, we've been on somewhat of a downward trend in deal activity, with last quarter representing the lowest deal count from CVCs since the beginning of 2014. In terms of geography, the majority of CVC deals are still being deployed in North America. You can see, though, that Asia's share in orange declined, while deals in Europe increased last quarter. It's also worth noting that Q2 is the first quarter we see Europe surpass Asia in CVC deals. Looking at the stage level of activity, we see that early stage deals account for almost half of all deal share in Q2 And when looking across the 5-quarter trend, we see that 1/5 of deals involving CVCs are at the Series B stage, with the exception of Q1 In terms of sector-level trends, we see that internet is by far the top sector for CVC deals. Meanwhile, healthcare deals accounted for more deals with CVC involvement in the software and computer hardware sectors. Finally, when looking at the mobile sector, we see that it's been neck and neck with healthcare, but it came up on top, accounting for 15% of deals with CVC participation. So now let's take a look at some of the data behind the CVC boom, which we've been talking about. Here you can see the number of CVCs that made an investment since 2012. As you can see, the number of CVCs is steadily rising, and we saw peaks in Q3 15 and highs in Q1 16 before leveling off this past quarter, with 176 CVCs making an investment in the second quarter of 2016. Here we take a look at the number of new CVCs annually making first-time investments. The interesting data point here is that 2016 is on track to surpass 2015 in the number of new corporate venture units making first-time investments. Some new CVC names making bets in 2016 include NBC Sports Ventures and Stanley Ventures, among many others. Now, what this next chart shows is the annual number of CVCs investing at the seed stage. As you can see, this number has also jumped up, with 2015 seeing a record number, 131 CVCs investing at the seed stage. Perhaps what's most impressive is the continuous upward trend. At the current run rate, seed stage investment from CVCs in 2016 will surpass the highs already set in 2015. What's telling here is that not only is the number of new CVCs growing, but that these investors are not afraid of pouring money into the earliest of stages. Some CVC funds known for making early bets include Amazon's Alexa Fund as well as Bloomberg Beta. So out of all the CVCs now in the space, we took a look at who is the most active investor out of all corporate venture units. In the first half of 2016, Google Ventures, now known as GV, surpassed Intel Capital as the most active CVC investor. GV is invested in a range of companies like Quartet Health and Managed by Q. We'll see how their deal activity is affected with the recent departure of CEO Bill Maris last week. Under Maris's leadership, GV saw billion-dollar exits in OnDeck, Jet.com, and Climate Corp, as well as stakes in Uber, Slack, and Flatiron Health. We're interested in seeing how David Crane steers the GB ship moving forward. Apart from CVC activity, we wanted to point out that corporates are increasing their activity into VC-backed startups. In the dark blue, we actually see that last quarter corporations participated in more fundings than CVCs did. And when looking at the more broad first half of 2016, we see that corporates participated in $11.5 billion in financings across 394 deals. So overall, we see corporates being a bigger force in private markets moving forward. So now that we have a better view of the macro picture, let's take a look at how corporate venture capital measures up with the greater VC ecosystem. Let's dive into comparing CVC funding and deals versus overall VC deals, which you're seeing in blue. As you can see, CVCs are making up a greater share of the VC ecosystem than before. In the first half of 2016, CVCs participated in roughly 20% of the 3,100 deals that VCs took part in. This percentage has grown every year, and we expect it to grow even more moving forward. So here we see a view into how CVC deal share continues to grow larger. We see that it's starting to edge up over 20% in some quarters, especially at the peak of Q1 16. CVC deal share was just at 16% in Q1 13, but now for the last 8 quarters, we've seen at least 19% of share through last quarter. And we know many of you are interested in U.S. specific data, so here we dig into U.S. CVC deal and funding activity as it compares to the broader venture capital activity. CVCs are actually taking a larger portion of U.S.-based deals as seen in the first half of 2016, with corporate venture units participating in 22% of all U.S.-based VC deals as opposed to 20% share globally. When looking specifically at deal share, we see that U.S. deals are taking a couple percentage points higher than global CVC deal share. CVC share reached as high as 23% in this year's first quarter, with 7 of the last 8 quarters reaching at least 1/5 of VC deal share. So this next chart shows how average deal sizes involving CVCs are outpacing VC deal sizes. As you can see, CVC deal size fell to a 5-quarter low in Q2 16 at 19 million. Despite the drop, we see that CVC deal size has been consistently larger than VC deal sizes over the last 14 quarters. Here we wanted to show that same chart, except with a focus on U.S. deals that CVCs are participating in. You can see that U.S. CVC deals are comfortably outpacing the VC deals in the 14-quarter trend. The last 5 quarters saw U.S. CVC deal sizes above 20 million, while each quarter in 2013 was below 20 million in average deal size. Now that we've gone through some high-level global trends, as well as measuring up CVC within VC, now let's take a look at some of the other trends in major markets like in the UK, India, and China, and then we'll take a small dive into CVC investment trends into the US. Starting with the UK, we see a pretty dramatic rise in deal activity, with last quarter hitting record levels of 21 deals recorded. In the first half of 2016, 3 out of the 4 largest deals with corporate venture participation were healthcare deals, including the $86.2 million Series C to Mission Therapeutics, F2G's $60 million round, and Invada, which raised a $45 million Series A2. When taking a look at China, we see the opposite trend in deal activity from CVCs. After record quarters in Q3 15 and Q1 16, deal activity dropped this past quarter, with CVCs involved in 12 deals to China-based startups. This represents an 8-quarter low and the lowest quarterly deal count since the second quarter of 2014. We'll be paying close attention to activity here to see if this is just a temporary dip or a spiraling downward trend. Finally, looking at India, this stood out because after 2 really slow quarters in Q4 15 and Q1 16, we saw a record of 13 deals recorded, with CVCs involved in 171 million fundings last quarter. Some notable deals with CVC involvement in the quarter include MobiQuick's $50 million Series C, Lending Cart's $32 million Series B, and Meru Cab Company's $25 million Series A. So breaking down the most active investors in these countries, we see several familiar firms. Most impressively, Qualcomm Ventures was the most active investor in both the UK and India. They were involved in India-based companies like Portia Medical and Housejoy, as well as UK companies like OneWeb and Blipper. Additionally, Qualcomm is the only firm to place in the top 5 in all 3 countries. And in China, we see that Legend Capital is the most active CVC investor, with Intel, BDMI, and Qualcomm rounding out the next 3 spots. So let's break down some of these corporate venture trends within the U.S. We see that U.S. trends are directionally in line with global trends, with both deals and funding CVC involvement on the decline in the second quarter of 2016. In the first half of 2016, corporate VCs participated in $8.6 billion across 376 deals to U.S.-based companies, a 14% drop in deals when compared to the same period in 2015. Additionally, last quarter's deal count represents the lowest quarterly total since Q4 13. In terms of geographies, CVCs are still doing over half their deals to startups in California, with the last quarter reaching a 5-quarter high at 58%. But CVCs are still doing a significant portion of deals in New York and Massachusetts. New York is taking an increasing percentage of deals, with its proportion reaching as high as 20% in Q1 16, while Massachusetts seems to be on more of a downward trend, going from 12% of CVC deals in the end of 2015 to 5% this past quarter. Looking at the stage breakdown, we can circle back to what we highlighted earlier regarding new highs in the number of CVC investment at the seed stage. But what we see is that seed stage deal share is attracting just 10% of CVC share in the first quarter of 2016. CVCs are a bit more active at the mid stage, with 46% of investment coming at the Series B and Series C stages in Q2 16. When looking at deals by sector, Internet deals continue to take the highest percentage of deals from corporate venture units. Healthcare deals took the second largest portion of deals from CVCs by top sector and ended off last quarter with 15% of deals from CVCs. To close out the macro piece, we also ranked the most active CVCs based on their US-based investments. Google Ventures was the most active CVC in the US. They're invested across a range of industries like healthcare and frontier tech, and their portfolio includes Orbital Insight, Magic Leap, Armo Biosciences, and many others. It's worth noting that Intel Capital fell from the second to the third spot in the US. We'll be paying close attention to the activity of Intel as they're one of the most tenured CVCs on our list here. Most of the most active CVCs in the US actually range from a couple industries, like Verizon Ventures from the telecom industry, Pfizer from the biopharmaceutical industry, and Bloomberg Beta from the fintech industry, which also recently raised their second $75 million fund. Now let's benchmark corporate venture units by exits and unicorns, as well as different verticals. So this table ranks CVCs by the number of unicorns they have in their portfolio. As you can see, both of Alphabet's venture units, Google Ventures and Google Capital, place in the first and third spot. Salesforce Ventures ranks second in CVCs investing in these highly valued unicorns and counts Dropbox, Anaplan, and Domo, as well as Inside Sales, MuleSoft, SurveyMonkey, and DocuSign, among others. Comcast has invested in a range of consumer unicorns like Instacart, Nextdoor, Vox, and FanDuel. In terms of portfolio exits, we have Intel Capital leading the first half of 2016 in the number of exits, followed by Google Ventures as a close second. The list also includes healthcare VC Novartis, CVC Novartis, which is actually the only non-tech corporate venture unit on the list. They exited companies like Curient, Intellia Therapeutics, and Agela Biotherapeutics, all three which have IPO'd. Salesforce Ventures and Qualcomm round out the last two spots in exit activity through the first half of 2016. Over these next few slides, we'll be comparing some select CVCs across different verticals, just to give you an idea around the number of deals they do per year, their deal size, and the most frequent stage they invest in. I'll breeze through these slides quickly, but as a reminder, we'll be sending out the data for you to review later on. And as another reminder, this is not a comprehensive look, this is just some select CVCs in certain industries. So here, just looking at some of the key CVCs in tech. Over the 5 years analyzed, Google Ventures has most frequently invested at the seed stage. But it's worth noting that this last December, they announced that they plan on pulling back seed activity. And this is actually mirrored in the data, as they have made 0 seed investments in the first half of 2016. A couple data points here for healthcare. Novartis and SR1 are a bit more active than some of their select counterparts, with deals ranging from 10 to 20 per year. Among the 5 healthcare CVCs, they are all most frequently investing at the Series A stage. Going through some media CVCs, we see that Comcast Ventures is the most active here and is most comfortable participating at the Series B stage. BDMI deals by year ranges between 15 and 25, and they most frequently invest at the seed stage. In the telecom sector, we have T-Venture and Verizon Ventures generally leading activity, and the 2 telecom CVCs are most frequently investing at the Series A stage. Lastly, comparing some financial services CVCs, we see that Citi Ventures and AXA are doing the most deals. As a reminder, we'll be sharing this data with you after the presentation. So now that we have a better picture of how CVCs in different verticals compare, let's switch gears and take a look at some sector-level trends in internet, mobile, and healthcare. We'll also take a look at some investor graphs in some other areas that are hot right now. So first, diving into the internet sector, we see the sector to track the most deal activity. In terms of overall financing trends, we see that deal activity actually fell to a 5-quarter low after spiking in Q2 15 with 176 deals and now down to 142 deals last quarter. Funding participation is also trending downward and actually fell to a 6-quarter low in Q2 16. The quarter-over-quarter drop-off is mainly because Q1 16 had 6 $100 million rounds with CVC participation in deals like Lou.com, Oscar, Flatiron Health, and Betterment, whereas Q2 16 only had one deal where CVCs participated in $100 million financing, and that was Slack's $200 million round. When looking at internet deal share by stage, we see that early stage internet deals hit a 5-quarter low, dropping to 46% last quarter from 56% in last year's third quarter. Meanwhile, internet deals involving CVCs at the mid stage, we see that Series B stage hit a 5-quarter high. The big news here is that CVCs are continuing to pull back a great deal in the mobile and telecom sector. Looking specifically at Q2 16, we can see the sharp drop in CVC deal count at 45 deals, which is the lowest quarterly total in 14 quarters. Funding to mobile from deals with CVC participation dropped in the first half of 2016 after the Q3 15 spike, which was driven by CVC involvement in billion-dollar rounds to DD Kuwaiti and UCAR Group. The drop in mobile is important, and we'll be paying close attention to this in the next few quarters. When digging into deal share in the mobile sector, we see that seed stage deals took the highest percentage of share in Q2 16 at 37% and went neck and neck with Series A share in the 5-quarter trend. Corporate venture trended slightly downward in the healthcare sector in the first half of 2016, with CVCs completing 91 deals compared to 93 deals completed during the first half of 2015. CVC funding participation totaled more than $1 billion over the last 6 quarters, with healthcare CVCs like Pfizer and Novartis participating in some of the larger deals last quarter. When looking at deal share by stage in the healthcare sector, we see that for the first time in the 5-quarter trend, Series A share accounted for a higher percentage of deals than Series B deals did in Q1 16. Despite this, Series B deals accounted for at least 30% of CVC deals in the healthcare sector across the 5 quarters. The next 2 slides we'll take a look at where our data is showing more CVC activity. First, we'll look at some activity from corporates in the insurance space. As you can see, deal making by insurance firms is on pace for a record high in 2016. Firms getting active here include insurers such as Aviva, XL Catlin, and AXA, which have all launched their own investment arms. In the first 3 months of 2016, insurers completed nearly 20 deals. The same set of insurers completed just 8 deals over the same period last year. Some deals include XL Innovate's investment in Slice Labs, a startup aiming to provide on-demand coverage for ride-sharing drivers and home-sharing owners, Intact's investment in per-mile insurance provider Metromile, and Mass Mutual Ventures, Transamerica Ventures, and AXA's investment in insurance comparison portal Policy Genius. Another area where we are seeing more activity is in the CPG space. When looking at the graph, we can see that Unilever was the most active equity investor over the last 5 years. They made a big splash in private M&A markets recently with their acquisition of Dollar Shave Club for $1 billion. Coca-Cola was active as well and participated in 8 equity funding rounds to private companies in Q1 16. We'll be paying close attention to the CPG markets as it's a well-covered area here for us at CBI. Before we conclude, we summarize the key data points from the webinar for your convenience. First, global deal and funding is down in Q2 16. Then we covered how GV was the most active CVC in the first half of 2016 and also counts the most billion-dollar companies in their portfolio. And finally, 2016 is on pace for a new high in CVCs making first-time investments. So that covers all the material we prepared for you today. Let's wrap up with some housekeeping on questions and getting underlying data. So as we mentioned earlier, we've included the full table of the most active CVCs, so you'll have these on hand for your reference. As for questions on the webinar and getting to the underlying data, if you're not a customer, you can reach out to our CEO, Anand, and you can see his email there, and also a link to set up a trial account. If you are a customer, you can get in touch with our customer success manager, John McKenna, and he can help you out further. Well, that concludes everything I prepared for you today. Thank you all for listening. We'll be fielding questions offline on Twitter if you use the CorpVC data hashtag. And if you want to find me, my handle is @Benjamin Waxman. Again, we'll be sending out the slide deck and webinar recording at the end of the presentation, which you can revisit. Thank you again for your time.
Okay, everyone, thanks for joining us today. As a reminder, we'll be sending out the slides and recording, so look out for that in your inbox. We'll also do our best to reach out and answer any questions we didn't get a chance to address here today. And don't forget, we're also a software company with the most comprehensive platform to help you draw your own business-specific insights about what's happening in the private markets. Let us know if you want to take a look. Thanks.